Hey guys, welcome back to the channel The Business Mentor, and this is your mentor Pranav. And in the previous video we talked about all the various short-term investment options that you have. But in today's video we are going to talk about the various long-term investment options that you have where you can invest your money. So let's not waste any time further and get into the video. Before moving on to the long-term investment options, I would like to talk to you about a special investment plan. Many people ignore this, but my advice is they should still invest in it anyways. And that, my friends, is a health coverage and a health insurance plan. See, life is pretty unpredictable, and this pandemic has made it more evident. So, if you want to live a life of dignity, my advice is invest in a health insurance. If your company doesn't provide one, you should get one for yourself and your family. A health coverage in India and can come to about 5 to 7,000 rupees annually, and it would give you a coverage of about 4 to 5 lakh rupees every year. So invest in a health insurance right now. So till here we've talked about all of your short-term investment plans where you have to work for your money. Now we're going to be talking about your long-term investment plans where your money works for you. Number one being mutual funds. So what are mutual funds? Mutual funds collect small amounts of money from investors like us and pool it together in a fund. Now, a person called a fund manager or the money manager would invest these funds in different instruments like stocks, like bonds, like government bonds, other policies, and so on and so forth. You don't have to worry about where it's going to be invested or how or even when is it going to be invested. You just have to give the control to the fund manager and he'll look after it. The fund manager takes about 1 to 2% commission of the entire fund's amount. So, this mutual fund is a long-term investment plan in which you should invest right now. If you don't want to invest in a mutual fund at one go, you can also invest in something called SIP or a systematic investment plan. Just like an ID, this amount also slowly moves out from your bank account to these mutual funds. And this way, you can create a mutual fund for a very long period of time. An average mutual fund in India can serve you about close to 12 to 13% gross annually. And that is a healthy amount of interest to earn for the same amount of money you were going to invest in an RD. Let's come to the parameters for mutual funds. Liquidity for a mutual fund is medium because it takes about 1 to 3 days for the company to process the amount and return it back to your bank account. Risk in a mutual fund is, as they say, mutual funds are subjected to market risks. Please read the offer documents carefully before investing it. And that is actually true. Coming to the risk in a mutual fund, it's a little bit high, that means it's medium. If you want to understand more about mutual funds and what kind of mutual funds you should invest in and when you should invest in it, I'll be creating a separate video on it later. So you should subscribe to the channel now and press that bell icon. Coming to the second long-term investment option, it's real estate. Now I already know that you people have already heard this from your parents that ghar ho to apna ho. And that's quite true. But purchasing and buying a piece of real estate or even housing has a little bit more technicality and a little bit more analysis to it, which many people don't know about or even think about. Let me explain you. So, if you don't have a piece of real estate and you're not living in your own home, then before buying or purchasing any piece of real estate, you should think about whether you are going to be able to support that long term or not. Without even thinking that are you going to be able to fund that home loan or property loan that you're going to take from the bank, or even if you're not, there is a lot more mathematical calculations that you should know about. I'll be again creating a separate video on this, so subscribe to the channel and press that bell icon. Coming to the house that you buy, if the house that you buy is serving you in the long term in a way like you're buying it and you can rent it out, then it's an asset. Otherwise, if you stay in it, it's not going to earn you any money. Instead, it's going to cost you money because you would have to expense money on it every year for its maintenance, for example, painting it, getting it repaired, so on and so forth. Also, if you sit down and properly calculate that the amount of down payment that you pay for your house and the rent that you're going to pay if you live in a rented house, and if the rent comes out to be less, then mathematically speaking, you shouldn't buy a real estate right now. Also, you should only think about getting into real estate and buying a piece of land or house only after you're 25 and above. This is because buying a piece of real estate requires a lot of financial discipline, and that can only be acquired after ample amount of time has passed. Also, if you get a home loan and get tied to it and something so tangible right now, you're not going to be clear about what is down the road for you. So if you want to move out of your city or you want to fund your education abroad, you won't even have any fund and you are going to be tied to the responsibility of paying for a home loan. And that is just not logical and just not right. So think about a piece of real estate and investing in it only after 25 years of age. There is actually no specificity to it, but you should be able to think about it clearly, and that can only be achieved after ample amount of time has passed. Coming to its parameters, the liquidity in a piece of real estate is extremely low because it takes about 6 months to a year to get the properties listed and then sell it and do the entire paperwork. Returns in a piece of real estate are actually low and can also be high depending upon the area in which you've purchased it, and the risk factor is again accompanied with the amount of money you've invested in it and where have you actually bought it. So if it's in a very posh locality, or even if it's a locality that can get transformed into a posh locality later, you're secured. But if not, it can be uncertain. So the risk is also medium. Coming to the last long-term investment option. Trust me, this is the point you should be interested in, and this is the point you should have been waiting for. And that is stocks. Now there are different kinds of stocks that you should invest in, but before even telling you that, I want to get this one point clear. Investing in stocks is a very serious task and it's a Herculean task as well. But just like any other Herculean task, it can be perfected. Perfected by acquiring knowledge about it, by having ample practice in it, and doing ample amount of research as well. This is something you should get into only after you've acquired the amount of knowledge that it requires. Even if you don't have the ample amount of knowledge for it, you can again go to a stockbroker, have the amount of knowledge and do only at his or her advice. I can give you the parameters of investing in stocks now. So liquidity is pretty high because unlike the olden days, stocks can now be sold instantly. Money can get transferred to you in real time into the stockbroking account that you have, which is a demat account. Again, the risk involved in a stock market investment is quite high because it can amount to zero and it can also amount to exponentially high returns. Coming to the returns in the stock market investment, returns can again be anywhere from zero to absolutely high. An example of that would be, so the Reliance Industries inception in 1975 in the stock market was pretty evident to everybody. In just after 2 years, that is in 1977, if you would have invested only a mere 1,000 rupees in it, it would actually amount to 16 lakh rupees in today's time. So returns in a stock market investments are exponentially high, but you need to be very educated about it. Please get that. One thing that I want to get across to you guys is that financial freedom should be your goal from right now, and no matter whichever walk of life you're from. Even if you're an engineer or a designer or whichever field you're from, it doesn't matter. Financial freedom should be your goal. And it can only be achieved practicing financial discipline. I know it should be taught in schools and I am aiming to do that in the near future, but till then, you should practice it on yourself. You can learn from me. This is your mentor Pranav Agarwal, checking out now. Thank you.